All right, let's also now get you the other big discussion that we're looking at this morning, and that's on steel. Given that we're seeing this huge rebound and with steel prices where they're at as well, what's the demand outlook looking like? We've got Paul Bartholomew and Amit Dixit joining us this morning on that discussion. Gentlemen, thanks for being with us. Paul, if I could start off with you. What's lending to the kind of buoyancy that we're seeing across steel and iron prices? Is it China's rapid recovery and consumption story, or are some of the big stimulus that we're seeing globally helping to keep prices elevated?
Yeah, it is largely about China at the moment. I think there's evident signs of proper downstream demand, a lot of stimulus going in, but I think this Q3 is just a very, very sort of buoyant sort of period. Globally, we're seeing a bit of a pickup in Europe. The US is still a bit in the doldrums. Their auto sector is still not really recovering, and we're also seeing a bit of a recovery in India. But it is really about China, and Chinese domestic steel prices around about $100 a ton higher than the sort of import price for Asian hot rolled coil, which is the main manufacturing steel. So it's really again coming very much from China at the moment.
Sure. Okay. Amit, if I could, get you in as well. How far do you think are Indian steel prices from import parity prices, and how much more room do you really think there is for further price hikes when it comes to the domestic steel manufacturers?
Indian steel prices have really gone up in the month of July, and after April we have seen the first month where prices went up. And just to put it into context, now prices as far as domestic market is concerned are at pre-COVID levels. But there is another interesting thing that you talked about, the import parity, because it's a moving target again. So import prices have moved up significantly. So if you look at last 3 months movement in international prices, you take any region except the US, prices have moved by an average of 19 to 20%, while in India prices have remained largely flat. So there is a little bit of catch up to do. But having said that, as we stand now, domestic prices are at a discount of roughly 1% to South Korean prices. But this is not something very unusual, and we have seen this to persist, that prices in domestic market have remained at a slight premium to international prices. But in an environment like this, where international prices are increasing week on week, you can just see Indian steel prices also going up. So they are just playing a catch-up game, I would say, in this scenario. I still don't see any concerns, at least in near term, on international prices, and therefore Indian steel prices also have headroom to move up further.
Sure. Paul, what is the pace of steel demand recovery in the Far East, in EU, US, as well as LATAM geographies?
Yeah, it's as I mentioned, we're seeing a bit of a recovery in the EU. I mean, obviously, a lot of the steel companies cut production quite drastically. So we saw production cuts, by up to about 60%. We saw that in parts of the Indian steel industry. We saw it in Europe, and in the US, the utilization rates are only getting back to about 60% now, compared to about 80% in March. So if you're producing less steel, then obviously that means that supply is a bit tighter. So that's helping to support prices a bit. But at the end of the day, you really want the economy to recover after the various COVID restrictions and lockdowns, and that's really is very dependent on many different countries. Even in Australia here now, Melbourne, where I am, we've gone into another 6-week sort of lockdown. So you're getting these little sort of flare-ups, and the latest one I think of interest in our region is in Vietnam, which for a long time seemed to have avoided the worst of the coronavirus. And Vietnam is a big sort of export market. India exported almost 1 million tons of steel to Vietnam in over April, June. and also, almost a similar amount to China. So if the Vietnam sort of market comes off, that means, also a lot of that steel has to be sort of redirected into different places. So there's no sort of consistency. It's a bit kind of as the various countries deal with specific cases of the coronavirus. But as I said, just generally, Europe's coming back a bit. US is flat. And Southeast Asia has its individual incidences, and then China's very, very strong at the moment.
Amit, steel demand ultimately is a function of global growth. If global growth is going to be slow, if the two of the largest steel consumers in the world, which was India and China, they are likely to grow at run rates which are going to be much lower than what the historical run rate for the last decade were, don't you think there is going to be a permanent challenge for steel prices to go higher?
Well, that's an interesting question, I would say, and currently we are seeing exactly opposite as far as China is concerned. A lot of people, including World Steel Association, had written of China that the growth won't happen in the current year, but we have seen that the growth has been happening because of the stimulus. So while if you take a very long perspective, I would say that Chinese demand is possibly past its peak. But if you look at India, currently, of course, demand being an aberration because of COVID-19 impact, and we expect that in FY21, demand would contract by as much as 13% YOY. But if you look at FY22, we expect demand to go up. But if you look at FY19 versus FY22, we will still say that demand, the consumption of the steel would remain quite flat. Now that said, still we see in India, at least in long term or medium term, we don't see a lot of concerns because there is a lot of pent-up demand as far as infrastructure, construction are concerned. So we are quite positive on India as far as demand is concerned. Now if you are talking about near term, let's look at this number that, in April, the steel consumption was down YOY by 90%. In July, that rate of decline has gone down to 31%. So much so that Indian players in July actually preferred to divert some of their export sales to the domestic market. So while domestic market, the demand is not exactly flowering, but still we are seeing it improving month on month. And I think that's a positive sign.
Paul, I'm going to draw your attention to what every major global administration is doing. They are prioritizing their local manufacturing ahead of global imports, whether it is India, whether it is America or European countries. So in the light of what has now become more like a political pitch and a survival pitch for politicians to boost up local manufacturing, I wonder what will happen to countries which are largely deriving large part of their large part of the revenue from steel exports. I mean, India exports, China exports, there are some other Russia exports. What happens to some of these steel producing nations then?
That's a good question. I mean, I think at the end of the day, everybody wants it'd be great if everybody's domestic economy was strong enough to, absorb all the steel and to support the various aspirations and manufacturing. But that's obviously not the case. I think for countries actually like Japan and Germany and and a couple of others that have really, their model has really been around sort of exporting, and particularly exporting into that manufacturing sector. Yes, they have sort of JVs and supply chains and stuff, but I think that's going to be quite challenging in a way because it is really that part. It is that manufacturing sector that is quite flat. I don't think we're going to see a massive lift in auto growth. I mean, it really has sort of plateaued in many different places. And if I could just touch on your earlier question about China, we thought China had sort of peaked in 2014, and the iron ore companies used to talk about China producing 1 billion tons of crude steel, and people sort of laughed at them. Well, that was almost the case last year. It's definitely going to be the case this year. So we actually sort of see the Chinese government's, very important concern is creating jobs. Now, China talks about what they call new infrastructure, which means more tech stuff, 5G, that kind of thing. But at the end of the day, they don't create jobs. So that's why we're sort of seeing a lot of investment sort of going into traditional infrastructure, which is building roads and bridges and ports. That's all very steel intensive. It employs people. Whether China needs more roads and ports, is another question. But I think China's sort of growth story, still has a way to run. It's not petered out as we thought it had.
Sure. Not petered out at all. Amit, so what's the biggest risk then at this point, given that we've seen this rebound both in steel and iron ore? What would you factor in, whether it's leverage for certain companies, whether it's the threat of a second wave?
Well, I would say that, leverage never sleeps. Leverage is always there, but it's a matter of time, whether you can actually service your debt or not, and that depends on your spreads, which currently are quite benign. Now, that said, of course, the second wave of infection is something that we are really wary about, and the stimulus that has been injected in Europe in particular, the way it goes, whether it goes into boosting consumption or boosting infrastructure, that is something that we really need to see. So I would say that the primary risk at the moment is essentially on the first signs of demand that we are seeing. If these signs of demand actually fade away, particularly due to second wave of infections or due to increased lockdowns, that is something I believe is the biggest risk at the moment.
Okay. All right, gentlemen, we'll leave it there for today. Thanks so much for joining us on the current trend that we're seeing across some of those commodities. We're going to take a very quick break, counting down as well now to the RBI policy announcement and whether or not we're going to see any major signals this time around on rates, and will they choose to take action or maintain status quo.